All right, welcome, everybody. It's the Trader Roundup podcast where highly attuned, like minded traders come together to get 1% stronger each and every day. My name is Kyle, otherwise known as JCapFX, and I'm your host for the first of many Funded Fridays. This segment's focused on all things prop firm and funding related, and I have some special guests joining me for today's stream. It's none other than Omar and Paladin, two of the industry's top funded traders. Welcome, guys.
What's going on?
Hey, what's going on, guys? How you doing?
Let me turn off this full screen. Yeah, so we got a lot of people tuned in right now. If you guys don't mind, why don't you guys introduce yourself and a brief backstory on your funding experience and kind of how we got here.
Yeah, so I'll start. So pretty much, my name is Omar. I've been trading forex now for about 5 years. I've been in the markets really like around 6, 7 because I started off with equities. Transitioned to forex because the leverage was better. Didn't need as much capital. Just the requirements for day trading was a lot better for forex versus equities. So yeah, kind of started off my journey there. And yeah, recently, actually, like as of last year, as prop firms started to get a little bit more popular, used that to leverage to make a good amount of money last year from prop firms. And yeah, now we're here, 2023, still utilizing prop firms, leveraging it, helping build like capital for personal funds, savings. So yeah, um, pretty brief backstory there.
Crazy times, short period of funded trading, right? That we're all experiencing.
Exactly, man.
How about you, Paladin?
Yeah, so for those of you who don't know me, I go by Paladin. I started trading currencies or forex in 2019 when I was in college, and then I ended up dropping out and then going back to college just because there was a lot of times in this journey where I would blow my accounts and then I would do really good, got excited, drop out, thought it could work out, blow it again, back and forth up until 2022. I was able to have my breakthrough year finally. I learned from my mistakes and I was able to withdraw multiple six figures from prop firms and get 7 figures worth of funding. And here I am now.
Man, what a journey. So if you guys don't mind, I'm going to bring in two other uh, partners that I'm working with, Mr. ICT Concepts himself, Kit.
What's
There you
up?
go.
How's it going, everybody?
What's going on?
What's going on, kid? How you doing, man?
I'm doing great. Nice to see you guys. You
I got to
guys
turn on these names.
crush it.
Oh.
And I love seeing your work. I love it every day. I mean, you're funded traders. I'm an older guy, so like options was my thing. So seeing you guys come up and how you're trading with Forex and funded trading, I think Funded Friday, it's amazing. It's an amazing concept, and I'm really glad you guys are here to talk about it.
Yeah, likewise, man. We've seen your Twitter calls every week, and it's been doing really, really good. And we were just on last week, and the production on that is insane. I did not think I was gonna come in there and have like sound effects in the background and all that. So yeah, man, like I look forward to seeing how that does in like a year or later down the road.
For sure, man. I mean, we do right now we're doing 7:30 a.m. So affirmations and models, something we're trying to do each and every day, trying to take it into probably about a 90-minute cycle into about 9 o'clock. So we ride pretty much that 90-minute candle, 2 45-minute sessions into New York, and then maybe some live streams too.
So I got a question for you guys because you guys, you have students that are probably tuned in right now. What do you guys see is the biggest, I guess, hurdle for funded traders, or for students that are trying to tackle a funded challenge? Like what, um, you know, I guess what areas do they need to improve upon? What areas did you struggle with at first? Right. For me, I think the over trading was the biggest thing. Like I always took good risk as far as percentages per trade. It's just I was way too active, way too frequent. So a lot of firms are doing no time limit challenges, and it's a step in the right direction. But yeah, just what's your guys' perspective?
Yeah, so it's actually kind of interesting, right? Because I think I always talk about this consistently, like with one of my trading buddies, right? Who's because we're always just bouncing ideas back and forth, right? And the biggest thing with funding, right? And I've noticed it as well, like, with a few of my students, and even myself, right? Like, I'm not oblivious to any of this as well in terms of an emotional toll when it comes to taking a challenge. And that's why I always advise people, like, if you're gonna take a challenge, right, you should take a challenge during two types of environments, right? First of all, the number one, if you're someone who trades well in consolidation or a trending market, right, then you should start a challenge when the market is kind of optimal for whatever style you're trading, right? Because if you're a trend trader and you excel in trend but you suck in consolidation, and you started a challenge in the past, let's just say you're only trading euro, GBP, the majors, and you were trading like the last 3 weeks, you would have struggled because the market was kind of consolidating a lot. And if you're someone who's always trying to get on trend, you're going to be caught in a bunch of reversals. So that's number one. And then number two is like when you're in the right mindset of actually taking a challenge, because the reality is this, like when you take a challenge, right, assuming you're not trading like, your other, let's just say someone doesn't have a funded account or they're not trading their own personal funds. And during that time, they're not making any money, right? Like that's just the reality. You're not making money in that time. So having like delayed gratification is important, right? And it's a lot easier said than done because you're seeing this guy get a payout on Twitter, you're seeing this person getting a payout on YouTube.
Oh
And
yeah, you can fall into that mindset where you're like, oh, I'm gonna get funded tomorrow and get paid out next week.
exactly, and that's like the wrong approach in my opinion, because the more you rush it, you're going to blow multiple challenges. And not only that, but then you put yourself in a psychological hole. I think it was ICT who said this on a recent he had like a Twitter call where he was just talking about different things, and he said that there's like something called like a mental drawdown that people have, and that's very true because the more challenges you blow, first of all, it sets you back mentally because you're blowing money, right? Like at the end of the day, even if you can afford the challenges, you're still running through cash. And what happens is now you're mentally kind of messed up because you're like, damn, I keep failing these challenges, and you think it's you or your system or whatever it is, but it's like, dude, you're just rushing the process. And again, it's a lot easier said than done to being patient, but I think that's just the biggest hurdles. And the best way, in my opinion, to kind of go about it is just like, listen, if you're gonna do a challenge, commit to it, right? If you have to get off social media while you're completing the challenge, just do so. Find what puts you on tilt, what makes you do stupid things, and then try to cut it off as soon as possible, right? Because you don't want to keep wasting money on challenges. It's the same thing funding a small account and just blowing it over leveraging. It's the
Yeah.
same thing if you're not careful.
See, like, if you guys don't follow me and my channel, I've been doing a funded trading series. So I'm just taking challenges at the funded engineer right now, and like I don't really have anything to update them on because it's literally the initial account that I started trading is literally down 0.5%, and it's been I think 2 weeks since I started trading it. So if I'm not gonna try and like force myself getting funded just for the views, right? Like I'm trading it how I normally would. And some periods just are not great to try and get funded. Like I'm not a great range bound trader. So when the dollar's just stuck in a consolidation, if I'm not nimble and quick enough in taking my profits, and I'm actually like a day trader, then I'm not gonna pass the funded challenge like right away because a lot of those trades are just coming back on me and stopping me out of break even. All right, so 2 weeks in, I'm down 0.5%, and it's like, all right, I'm not really in a rush to show my viewers that I can get funded. Like the biggest thing is if there is a time limit, then maybe you have to press a little harder, right? Like
Yeah,
if I had a 30-day time limit, I'd be trading a lot more.
yeah,
But if I don't have a time limit, I'm waiting for the right conditions. Like that's pretty much straight up.
I find that the biggest sort of hurdle is traders' expectations. So Omar, you were touching on the fact that you got all these social media, I guess celebrities or lifestyle traders, and traders who are starting out. They have this desire to make X amount of money, or they want to get out of this particular job, or they're going through whatever they're going through, but they have a desire, whatever that desire is. They see trading as a way out. And so they come into trading with this expectation to achieve what traders like yourselves have achieved, that have taken many years, because all they see is the tip of the iceberg. They don't see the work and the sacrifice, the grind, the emotional, the physical, the mental, the financial sacrifices that it takes to reach these levels, right? And the reality is that there's stats out there that are public, and the stats show that less than 1% of traders actually make it to payout. Yet traders are aiming. I mean, they put this getting funded, passing a challenge as this is victory, right? This is right. This is what success is. And so prop firms, they monetize on this, and that's why you have these certificates. So, right, so this certificate is now a trophy, but it's actually it's not reality as a trader, because a certificate, a trophy means nothing, right? Passing two phases, it means nothing, because if you don't have the core principles, the pillars of trading, right, you need both a tactical and a mental edge. And so the tactical strategy gives you the edge of whatever price model that you're following, right? It's just over a large sample of trades, you're going to have a higher probability of having a positive expectancy. Your trading edge is going to allow you to execute that tactical edge consistently with discipline. And what ties all of that together is your risk management. And so traders have no idea when they first start. All they see in social media, they just see the Lambos, they see the PJs, they see the watches. They don't see what it actually takes. And so that's why I'm very honored to be in this conversation with you all, because I want to address these things. We're here to address these things and talk. Like, everyone who's listening in, there's over, wow, there's close to 500 traders listening in live, right? Amazing. Like, it's very important for us to address these issues. That's
like for me, I didn't touch a funded challenge until like 7 or 8 years into my trading career. I mean, part of it was, if I knew about it earlier, maybe I would have done it earlier. But yeah, I've been trading for a really long time before I even touched a funded challenge. I don't know about you guys. I mean, for me, I always knew about like brick and mortar prop firms. That was kind of like, I wanted to be in one of those brick and mortar prop firms, but I just didn't have the credentials to get into one. Right. So I already had the skill set. I just didn't have the capital.
Yeah, for me, when I started in 2019, I didn't utilize prop firms. I was just trying to put a small amount of cash into my broker account and flip it, because that's all I would see online on social media. Oh, they're flipping $500 to 10K or whatever. So I thought that's how you trade. And then
Yeah.
only until 2020, when I discovered FTMO, I actually put my last money into a prop firm challenge, and I took it very slowly, and I did end up passing my second one. For me personally, I gained experience as I did more challenges. But the thing is, I didn't do a challenge, fail, and then just start one up right away. Instead, I would sit back, look what I did wrong, write it down, take notes, read trading psychology books, understand what I did wrong so I can improve on myself.
That's what you should be doing, right? Like, if you're just signing up for accounts and blowing them, like, you're not learning anything.
Exactly. And the thing with that is, that's sort of gambling. And even if you, obviously, when you gamble, you will have that small percentage of getting lucky. And say you do gamble and finally get funded, you're not going to have that funded account for a while. You need to have, like Rodrigo mentioned, those principles as a successful day trader who has years of experience have. If you're new and you're just trying to go to prop firm and get funded by gambling, by risking too much, and also talking about the first question about what's the number one problem, I think it's with my generation. It's, we want everything so quick. We think that we're gonna get rich quick. We want everything, and I always say, if you come into trading with the mindset of get rich quick, you'll just get broke quick. So you want to make sure that you have a core foundation. You're learning. You're doing challenges. You're making mistakes, but you're also just reflecting on your mistakes and learning from it. That's the most important thing. If you want to get funded, and if you do want to make withdrawals, big withdrawals to go full time, then you do need to be able to, the number one thing is not just reading books. It's just all comes down to experience. Experience is the number one lesson that has made me the trader that I am today. So yeah.
Yeah,
And
I
also,
mean, you brought up
and
a good
also,
point as far as
also guys, I'm also writing notes. So people in the chat, you gotta write
Yo,
notes, man.
you
I got a
always gotta
quick
learn,
question.
man. Always gotta learn.
I got a quick question.
Yep.
how often do you guys within funding are you guys? I mean, I know back testing is primordial, but I'd be curious with the audience if you could give them an idea of how long, like, are you operate? I know Kyle's mentioned his weekly expansion and there's fewer trades and kind of like a one shot, one kill kind of higher time frame setup and model. But for you guys, your model, how you like to back test, finding your own, as you mentioned, experience. Would you mind speaking on that a little bit more?
Yeah,
Like just back testing overall and like your model.
yeah.
that you
Honestly,
use.
I'm very similar to how Kyle does it as well. Because like for me, I need a bias on either the 4 hour daily or weekly. So I need to see a very clear direction. I've tried scalping, like and then using the hourly as my quote unquote higher time frame, but most of my losses come on that type of like style, right? Like I can still make it work, but it's not ideal, honestly. So for me, it's like if I have a clear bias on 4 hour daily, is there a clear objective? So let's just say so GU, like again, I post all this stuff in like my public Telegram because I enjoy kind of putting it out there. But GU was anticipating like a little bit of downside, right? Because looks like we finally were getting out of the range. There was a little bit SMT divergence on the daily time frame. So it's like if you can anticipate the next daily candle or the next weekly candle, right? You have your bias for the day, for the week, right? And now all you're doing, let's just say you're short bias, right? All you're looking for is a retracement above like the midnight open, right? Above the Asian high into some sort of premium level, premium PD array. And at that point, if it comes in line with the time, you can just either sell that high or you can just wait for a confirmation like M5 structural break, M15. You might wait for a displacement on M5. For me, I like balanced price range as confirmations on M15.
Nice.
Yeah, so it's very simple once you have
Balanced
the
price ranges, I think, are really. I mean, that's a
Yeah,
really really good
Oh yeah.
point of reference.
it
I think
really is.
I think there's a huge misconception with people trying to trade all the time, right? Trying to
Yeah.
trade the 5 minute or the 15 minute.
Mhm.
That's okay. It's okay to look at, in my opinion, but you shouldn't be trying to execute every 30 minutes or so, right? Because if you're going to do that, then make sure your risk is at a level that is going to handle that frequency of trading, right? Like, let's say if you're going to be okay with like a 1% loss on the day, maybe split that up into 5 trades, right? Like now you're risking the 0.2% over 5. Now you're giving yourself 5 shots to take that 1% risk. If you are going to take like 5 trades, which is a lot of trades, like I'm looking for
I
one
agree with
A+
that.
setup a week.
I agree with I mean, I think everyone here, I mean, you get better with your stop loss and you get a lot tighter with your stop loss. So if you're risking less per trade idea, you could still have a high amount of reward, right? So I
Yeah.
know we all trade different assets, but the better you get at this game, then the tighter your stop loss is, which absolutely crushes all of your metrics, right? So you could take more losses and still be okay. So
Yeah.
it's
Something,
nice
yeah. So something interesting that I kind of wanted to go over is just let's take a look at the TFT leaderboards and let's just kind of chop it up here. Can you guys, hopefully you guys can see the screen.
Yeah, I can see it.
for sure, bro.
All right. So this first one, I don't think this first person's got 100%, but something's off with it because it looks like they've only taken 11 trades and their profits are like small. So I don't know if this like their account size got doubled or maybe they merged their account from 50 to 100. So I don't think this top person, the 100% return is not realistic. But this next person, man, they're up 215K so far this payout period.
Crazy.
Crazy.
So let's take a look at some of these stats, right? He's got a 54% return, 12 active trading days. His profit factor is like a 1.75. So that means he's doing like a 1 to 2, right? He's doing like a 1 to 2 almost. And he's taking 43 trades. So it's really like a 1 to 2, right? If you're taking 43 trades, then yeah, it makes sense that he has a 54% return. So mostly gold. He's trading mostly gold. And it looks like he's got a 38-cent loss in the euro. Not exactly sure what that's about.
Oh, he got a $98,000 day right there.
Ooh.
That's a
I'm
good
just-
one.
That's a,
I'm,
yeah.
That's a
That's
good
where it's
one.
coming from. Damn.
That's
I'm
a
looking
good
at that
one.
60K, that 61K.
Ooh.
What's that? Was that
Nice little
2%?
weekly expansion, maybe in a day.
So he's trading on a $400,000 account.
It's 25% win.
But
That's interesting. Is this not breaking the 5% daily limit?
was he? I don't know. It's like a sniper, man.
He must be hedged or something.
Yeah, or it might be like yeah, it doesn't look like he's scaling in. It's like one entry.
All right.
Yeah.
Oh,
which
you
is
know
pretty
what? You know
insane.
what? He probably had a win. He probably had a $55,000 win, and
Oh,
then
and then
allowed him to take another trade at $61,000,
yeah,
right? Because then you're not gonna
Oh.
break. Then you're not gonna break the daily loss limit. If you're up 50K on the day, then you can risk however much you want.
yeah, man. I don't know.
Sheesh.
Especially he's putting like 40 lots on gold, so like,
Yeah,
sheesh.
this is risk tolerance on another level, guys.
Yeah, for
Let's
sure.
go to the next. Let's go to the next one. Kiara. See load here. All right, 31% return. She's got 20 active trading days. 1.5%. See, this is 341 trades is a lot of trades.
Yeah, it's probably a scalper.
But it's more reliable. The data is more reliable.
Yeah, this data is probably a little bit more reliable than the one we just looked at. I mean, just from the equity curve, right?
That's
You have
a great
nice,
equity curve.
a decent, steady equity curve.
It's really
I don't
good.
know what happened from here to here though, right? You're going from like 125. This is a huge increase. I don't know if that's scaling in or this is interesting to think about, right? Like maybe they did scale in and they had their risk really low and their return on this one specific trade like was outsized. But it looks like they've been on a losing streak for the last week or so, week and a half. So do they ride this out until the payout split, or do they blow it all?
I think the most important metrics that you need to sort of judge yourself on is your average wins, your average losses. You want to also look at the size of the maximum loss versus your average wins. So working at City Traders Imperium, I noticed that the best traders tend to have a higher average win than their maximum loss.
Yeah.
Right. And this is the key. So if, for example, you have a trader who is risking 1%, right? And their average loss, let's say, is around 0.5%, because at some point in that trade management, the trader reduced their risk slightly. Yeah. However, if their average wins were, let's say, 2 times bigger, then this trader is more likely to have a positive expectancy or a healthier equity curve. Whereas the majority of traders, they'll have the odd maximum loss of, let's say, 1.2 or 1.5% or even 2%, whereas their average wins are around 0.5%.
Yeah, so like this is like
Three.
staircase up, elevator down type.
Yeah,
I guess equity
you can
curve,
always
right?
tell by
Like
the
it
equity
takes a
curve
long
like
time to
that.
build it up. It takes a long time to build it up, and then they blow a lot of their gains in one poor loss.
Yeah, and that's the thing, is that when a trader trade, you can always tell when they're very outcome based, right? When they're trading the P&L and they don't really have a tactical or they don't really have a mental edge, right? And risk management, because what happens is that they're taking these big losses, and as soon as a position goes into any amount of profit, they close it quickly, right? Because of fear of losing that profit. And so it's very important to give your trades breathing room, for one, and you need to have a large average winner. Otherwise, it's going to play on your psychology. It's going to affect how you apply yourself, and you're going to get too attached to each and every trade, which is one of the biggest problems for funded traders.
Well, yeah, one thing I wanted to add too is the people we're looking at the leaderboard, you don't want to copy them because I guarantee you all of them or most of them have a big safety net. Like if
Yeah.
you're up $20,000, the average person will be like, oh my God, $20,000, I'm withdrawing that. For them, they're like, screw it, I'm gonna just gamble with it. I'm gonna see how far I can take this up. So you shouldn't be copying these people on a leaderboard.
No, this is more
the
just
best
like a case study, you know? This is more just like let's take a look at what people are actually doing out there.
Yeah,
But
for
yeah,
sure.
definitely
Yeah,
don't
for
try and
sure.
replicate what they're doing because I can tell you, you know, from firsthand, if you're not willing to lose that account, right? Like this guy's the guy that we just reviewed, right? He's willing to lose 60K in a day. Can your heart, you know, can your heart withstand that level of stress? Like if it's going to put you in a cardiac arrest over it, then you probably should not be trading in that manner. This is a pretty good one I'm looking at right now. Look at their profit factor. It's a 4.98. Their
Oh wow.
winning trade percentage is 77. This looks almost like an EA. They've taken 264 trades,
Yeah.
5 trading days, and it's a really nice, smooth equity curve.
And I actually want to touch up on something that Kyle was talking about too, about like risk tolerance, right? Because I think that's something that most people don't even like talk about. Because like when you see someone who posts a big P&L, right? Like let's just say someone posted a 5-figure day, right? You don't understand like what that person's risk tolerance might be much higher than yours, right? Like you have to be honest with yourself. I remember I went to the Chart Addicts convention here in New York when they came to visit, and one of the guys there, he was talking about how like his risk tolerance, he's just trying to make anywhere between like 7 to 12K because he's running a business. He has a restaurant here in New York. So that was just I think that's such an underrated topic where people don't understand like your risk like you can't expect to make like $10,000 in a day, but then you're not willing to risk 2 or 3 thousand on any given trade,
Yeah,
right?
exactly. And if you're
Like
not at that level yet, you got to build your way up there. I just
exactly.
remember, I just remember when I first started trading, like we all do. If we started out at a retail brokerage, right? I was probably depositing like 2,500 to 5K, and I was only really willing to risk like $100 and $150, right? Maybe it's less than that for you guys, but I didn't just get to a point where I'm like, oh, well, okay, losing, you know, X amount of money. That didn't happen overnight. Right? Like it was a year over year over year process of me trying to size up and get bigger. And like next year, I'm hoping I'm training a bigger size, right? So it's like building a muscle, right? You can't go in the gym and expect to lift, you know, 300-pound deadlift tomorrow if you never lifted a weight before, right? You got to start basic and build those muscles up and that strength. And it's the same thing with risk tolerance. You can't just go from risking $100 today to now you're okay losing 60K tomorrow.
Exactly.
Yeah, just to add on to that, I remember in 2019 when I first started trading, I remember I was up like $30 risking 0.10 lot size, and I was excited. And
Yeah,
then
yeah.
eventually next year the lot size got a little higher, then a little higher, and then a little higher. So definitely agree with you have to build that risk tolerance. And also it comes down to building that foundation. If you want to make a lot of money in this industry, you're going to have to build the foundation. The foundation, what I mean by that is building your capital, because the more capital you have is the more money you make. You don't necessarily make more money if your strategy is more accurate. In with the prop firm industry is if somebody has 7 figures worth of prop firm capital, yet their trading strategy is maybe 40% profitable, or they're not as great of a trader as someone with say 100K capital, they could still make more just because they have more capital. So building the foundation is one important thing if you want to do this full time in the long term.
Oh yeah, and just to build on Paladin's point too, right? Because I have a personal example as well. Like I remember when I was trading, I think it was 2020, during like the pandemic crash, right? I remember like one of my friends, like he had like a big trading account, right? So he was taking the same trades as I was, but I was looking at his P&L, right? Because we had like a friends group chat, and he would be up like, he would be making $10,000, $12,000 on any given day.
And you're
And I
making like
always
50
viewed
bucks.
myself, yeah, and I always viewed myself as a quote unquote better trader than him in terms of like, understanding market concepts and executing as well. But when I look at my P&L, I'm like, damn it, I would try to rush it. Like, you know what? Let me just
Yeah.
put on more size. but I mean, again, at the time, like he was 34 at the time. He had a whole mortgage business that he was making money from. So like trading was like just kind of, he viewed it as a hobby, even though he was making full-time income, and he knew how to trade too. Like, don't get me wrong. But again, he wasn't taking it as serious, and he was just kind of taking advantage of like volatility because that was kind of his bread and butter. And it goes to show, like, because I started to rush a little bit and started putting on a little bit more size in that
Yeah,
trade.
because you're trying to compare
Well,
yourself to him, right? Like you want to
yeah,
make the money that he's making.
exactly. And at that time, like I couldn't handle the same drawdown he would because he would hold. Like I know, like everyone's like, oh yeah, everyone uses stop losses. Trust me, there's traders out there that don't use stop losses. They just scale into positions and they kind of martingale their way out of a trade. Again, not advisable at all because you will 100%. Yeah, you will 100% blow it.
Kids like don't do that, man.
Yeah,
No.
no, I would
No.
not. Yeah, that's
No.
something I never. Yeah, I never got that habit from him either. Even though I saw him making good money, I'm like, yeah, no, that's dude. One wrong trade, and he got caught in like a really bad position on I think it was natural gas because he was trading futures, and that there was like a major short squeeze, and he got margin called, and it
The
was
only
not.
people that can trade like that are banks because they have the liquidity to keep
Yeah.
adding into positions.
Yeah.
Mm.
Yeah. You can't do that.
Yeah. Again, not advisable, guys. Just saying like what some people do to kind of avoid doing that.
Yeah. No, for sure.
Yeah, so I think with that, guys, we're gonna just take a little quick short break. I think when we come back, either we're gonna do Q&A or invite some people into the chat. So we'll take a little break and we'll be right back. Right?
Yeah.
Yes, sir.
All right, we're back. Let's pull up the chat. We got some questions in here. We hope you guys are enjoying the stream. We got a lot of questions up here.
We're ready. We're ready, J-Cap.
We got Riz in the chat. What's
My
going on?
guy Riz, words of wisdom. Go check out the podcast.
Riz, if you want, maybe DM us. We'll send you a guest speaker link.
I don't know where my video went.
Kit's a boomer. He can't. He's having a hard time with the videos.
That's all right. Maybe that'll work.
Let's see if we got any coaches. Oh, sorry, questions. How many pairs do you trade Paladin and JCap? I personally trade like 3, mostly the euro, the pound, and maybe like the dollar CAD or the dollar yen.
Yeah, likewise. Euro USD, GBP USD, and then sometimes AUD USD.
Yeah, same. Either it's going to be Euro, GU, and like sometimes I watch S&P 500 and Bitcoin. So it's pretty much 3 to 4.
What about you, Rodrigo?
So I like at the moment DAX 40 and the 3 US indices, Nasdaq, S&P 500, and the Dow. So US 30. So I trade the CFDs because that's what's available with these prop firms usually. But at the moment, my bread and butter is DAX 40.
Somebody just said in the chat they're shorting ES right now. So, Kit, you got any input?
I like the Tuesday price range. I like the Wednesday price range. I like us falling back into that price. I feel like that's where we've been inclined to go today. And from a clearance and settlement standpoint, it makes sense since a lot of these orders were processed 2 days ago. So when looking at 3 days highs and 3 days lows, I'd be looking at Tuesday's highs and Tuesday's lows in equilibrium, and that's where I would be basing my trade plan around.
So Shuba Mway, is this going to be on the YouTube channel afterwards? Yeah, it's literally on all of our YouTube channels. So if you go to any one of our pages, you're going to find it.
Yeah, I think I know where ICT Concepts is live too. It's cool. We're all live, right?
We are all live. We are on Twitter.
That's wild.
I don't think Omar and
Twitter?
Paladin are on Twitter. Yeah, we're on Twitter.
Let me hop
Twitter's
on Twitter.
broke, man. Twitter's broke. It does not do live streams very well.
It does. It's okay. It just has to like this live stream is in 1080p. So Ganesh,
Yeah, it breaks pretty quick.
Gatakar asked if we have small capital like $200, what is the best option? Trade that $200 or buy small prop from challenge and try to pass it. That's a really difficult question. How much is the 10K challenge? $50?
I think it's like 100 something.
100.
I would say that you need to prioritize your education. You need to prioritize your development. So if you've got, let's say, whatever amount of money that you have, you need to ensure and you need to prove yourself, at least on a demo account, that you can actually not only pass but also sustain a good level of performance over a period of time. So I would say invest in yourself, invest in your education, find good mentors, find good coaches, find a community of traders. I think I always recommend that instead of focusing on, right, I need to buy as many funded accounts. It doesn't work that way.
Yeah, like everybody, I mean, even for me, I always felt like I was in a rush to try and get funded right away, when honestly, it's best if you just, I think the biggest periods of my growth was when I just honestly focused on my career and focused on saving up my money and not focus so much on trading, because trading, if you get too deep into it, you can burn out really quickly.
I wanted to add to that quickly. I think it's so important, and you guys are all living, breathing examples of it. It's like when you compare to a mixed martial art or like jujitsu or judo, like a black belt, you don't know what you don't know when you're beginning, versus someone that's been doing it for a long time that has these very highly refined, nuanced skills. I compare it very much to like being a combat sport, right? Like all of you guys here are black belts. It's just that simple. And a lot of people that we're talking to, they're just kind of stumbling onto the mat for the first time. So it's really important that people take the time to educate themselves and to really, this is a master's in finance in day trading, right? All of you guys have successful high level degrees that you've self-taught yourself through the freedom of information in the world that we live in, right? So I think it's really important, anyone that is listening, there is a lot of free content out there. You can get weekly reviews from a lot of these guys, and then you could be studying on your own. The mentorship and the core content are classes that you could be taking in this self-taught university of day trading that takes a year to 16 months, to 18 months. So I think everyone here can respectfully relate to the time commitment that it takes. And the more you can get along living your life and utilizing these ICT time-based models, right? 10 o'clock, 2 o'clock, that's it. Live your life. Figure it out.
You know what Kit says on Twitter Spaces all the time is that the master has failed more times than the student has tried.
I think everyone here, every single person here that is sharing the screen is very apt in being able to make that statement declaratively. They are masters at their craft because they have failed more times than you have even thought, the listener that might be new or hearing this for the first time, than you have ever even attempted to do it. So I think that's a wise parable. I think it's multicultural. We are a global audience. The one thing I really enjoy saying, just with everyone here, is, I mean, there's every bit 45 different countries, 50 countries worth of folks that are listening to this conversation right now. So understanding that, I just want to embrace the entire audience who's listening and just saying, you know, we support you in this effort, right? So,
absolutely.
Yeah.
Also,
Yeah,
can
we're
I
here.
answer
We're
that
here to
question?
Takes
share
time.
information and
Takes time. Go ahead.
Can I answer the question real quick about what was it? I had $200 left in my bank account or something.
yeah.
For me, from my experience, I thought I could go full time as a broke full time day trader, and let me just say that was like the worst 6 months of my time because I was so invested in all my trades. I would be up for London session. I'll be up for New York session. I would try to trade every session because I'm full time. I gotta make it from this, and that was my mindset when I was a full time broke day trader. And let's just say those 6 months were the worst periods in my trading career. I was not profitable. I was so stressed out. I was somewhat depressed. And if you really want to be profitable long term, what I highly recommend is you need to have some sort of safety net. I wasn't profitable when I was a full-time broke day trader. I made my first $40,000 with FTMO when I was full-time college student, when I was working 36 hours as doorman, training for a marathon, and also trading on the side. So I was not feeling emotional when I would trade because I know that I have such a good safety net. I didn't need to rely on the outcome of these trades that I was taking. And I somehow made it. And eventually, once I was able to build enough safety net, once I was able to get more funded accounts, then I decided, okay, I have a good enough safety net. I have couple of months of expenses saved. I don't need to rely on any of these trades for the next couple of months and I'll be fine. That's when I went full time. And that is the best position to trade in. You need to trade in a position where not everything relies on you passing this challenge. You making sure that the next trade hits TP.
Yeah, you don't want to be in a position of desperation, right? Like you want to be in a nice comfortable position where you can be comfortable taking monetary risk and not fearing losing money, because that's just one of the biggest parts of trading is you're going to lose money, and how do you react to it, right? If you're like down to your last dollar and you lose, half of it, you're gonna you're gonna start making decisions out of desperation than being in a nice mindset where you have actual clarity behind your decision making. So, I mean, I guess it depends on where you're from. Like, if $200 to you is 3 months worth of living expenses, then, like, I mean,
Is that
it's a real,
possible?
yeah, I mean, I'm sure it is. I'm sure in some places the $200 is, it can get people a long way. So you kind of have to weigh where you are as far as your life situation. Like for me, I live in New York. I mean, you guys live in New York too, right? It's not cheap to live here. So you can't really like look at what we're trying to make because we need to make. It's like you're gonna need to make 6 figures just to get by, honestly. So other parts of the country, other parts of the world is not like that. So what other questions we got in here? This person had a really good question. Zach had a question about scaling. When scaling, do you trade your funded account as well as a new challenge account, or do you think it's better psychologically to leave live account alone? Honestly, in my opinion, let's say if you're not proven as a funded trader and you haven't gotten a payout yet, then just focus on the live account and prove to yourself over the course of 3 months, 6 months that you can actually consistently pull money from the markets. Because if you try and trade them simultaneously, and let's say you can't pass the challenge, well, maybe your actual funded account is going to take a hit too.
Yeah.
Guys?
Yeah. No. That's actually a really good question, right? Because I tried to do that last year, and all it did was just bring a lot of torture, like mentally. Like, so now, though this is my methodology and my kind of like thought process is like if I have because obviously like, these funding accounts is like bi-weekly payouts. So if you have a nice bi-weekly payout, so if I get like $4,000 or $5,000 in terms of a payout, and I feel mentally inclined, like in the beginning of the stream we talked about like two requirements for me personally to start a challenge is the market is somewhat trending because I trade better in trending markets than consolidation, and it's easier to get better risk to reward in a trending market. And number two is like psychologically, am I ready to kind of do a challenge? Because it's completely different, man. The mindset when doing a challenge versus when you're trading live. Like if I'm trading live, I can wake up in the morning, look at the charts, I don't see anything, go hit the gym or do something else.
Yeah, there's less pressure.
Yeah,
but still, honestly, going through it does kind of build a habit where you're doing the challenge, and then once you get funded, like you almost feel like there's urgency too, right? You kind of once you get funded, you kind of have to just say, all right, now I don't have any time limits. Let me just take my time and find the best setup.
Exactly, man. So I don't know. Like for me, if assuming you have a live account as well, based on the question, the way I personally do it is again, if I have a payout coming up, all right, you know what? Am I mentally ready to take another challenge? And if so, I'll just lock the payout in and then just start a challenge. Again, it's just less stress because the problem is if you blow the live account and then you blow the challenge, now it's like you just screwed up 2 accounts,
Yeah. It's not advisable. Like if you can't afford to lose both of those accounts,
Yeah.
it can be done, right? Like I kind of scaled up my way doing that. I was trading live and I was trading challenge accounts at the same time, but it's not. I'm comfortable losing the money. Like I had the money to just pay for more challenges, but not everybody's in that position to do that. And it really comes down to like your confidence in trading. If you have to ask, I guess, then maybe your confidence is not at the level where you can handle both accounts at the same time. So Mateen says, "Can we have Michael Huddleston next week?" Maybe.
Yeah, if you guys subscribe to Trader Roundup, that's a possibility.
Yeah. If you guys share the channel, subscribe to all of our YouTube channels.
Yeah, you got to help us grow, and then maybe it'll come.
Yeah.
So let me throw up the QR code. If you guys aren't already, hit the QR code down below and sign up, subscribe to the Trader Roundup YouTube channel. Give us a thumbs up, smash that thumbs up button. Show some love.
Yeah, if you guys want
really
ICT,
appreciate it.
You got to blow up on Twitter. Got to tag him on. You got to tag him with Trader Roundup and just blow it up. We might get him on at some point in the next few weeks. Hopefully, why not?
That'd be cool one day.
So I think more questions. How much longer do you guys have? I don't want to take up too much of your time. I think I wanted to bring up some actual speakers if we can. I'll send out the invite link in the chat. We only got room for 5 people, so before we interlude, I'm going to send out the invite link.
Oh boy,
it's literally first come, first serve.
Who's the best day trader with the trigger finger? He's got the fastest finger.
Fast finger. All right, ready? We're gonna go. I'm gonna send the link out right now. First 5 people to come in.
Are you gonna do it right now?
Yeah, and then we'll take a quick short break. And they'll be in here. All right. So if we guys, we'll let me. I'm gonna ask you guys a question. All right. So what is your biggest hurdle when it comes to funded trading? So comment in the chat. If you can't be a speaker, then we'd love to hear your thoughts. If you don't put it in the chat, put it in the in the actual comment section of YouTube, so we can actually take a look at it later. All right. So the guest invite link just went out. So good luck, guys. We'll take a quick short break. We'll be right back. Yo, what is going on, guys? Can we bring up the name tags here? We gotta hide this question.
Has a bunch of people on.
Yo, what's up?
Yo,
You
we
guys can
got
hear me?
Jordan. We got Ito. I think that's Ito. Brody and GLS.
Brody.
I think GLS is having some connection issues. Maybe their connection's kind of low. What's going on, guys?
What's up? What's up?
Welcome.
How you guys doing?
Where you guys from?
I'm out here in Connecticut, USA.
Nice, man. Them high taxes, bro.
Oh yeah. Oh yeah.
Oh, shit.
Crazy.
Some high taxes. That's funny.
So tell us a little bit about yourself. Are you a funded trader? You're trying to get funded?
Yeah. So I've been funded with FTMO 100K for about since last July. Really.
Nice.
So it's been good, but I'm really just my biggest thing is just scaling up. And just finding, that I actually had some questions for you guys on that, just how, you guys did that. The biggest, I would say, hurdles you had when doing that. And yeah, just really looking to break to the next level.
Yeah, I mean, for me, I think the best advice is to just, if you still have the 100K account, is just trade that slowly and then start putting money aside for more challenges. And honestly, it's up to you if you want to go for the 200K account size or continually do the 100Ks. But like, yeah, I mean, I guess it depends on like your expenses and stuff too, right? If you can just honestly set aside whatever you make in profits from FTMO and just set it aside, right? And then just pay for more challenges that way.
Yeah, to add on, let's see. So right now you have a 100K account. What I would recommend is not to do another challenge immediately, but rather have a buffer, be in profits on that 100K account, and then you can start another challenge. That way, in case you do have some sort of losing streak in the worst case scenario, you'll just use up the profits from the FTMO. You'll always have that 100K FTMO account, and then you might end up failing the challenge. You always want to see what's the worst case scenario. You don't want your worst case scenario to be, I lost all my funded accounts, and then now I'm back at scratch.
Yeah, that's like the worst thing. And it's happened to me where I was like, all right, I don't have a funded account anymore. I'm still working my job. Now I have to actually be stressed about trying to get funded again. And honestly, you don't know how long that might take. Like if you're going through like a consolidation period, like we're seeing in the dollar right now, like that could take a month, 2 months for you to get funded again.
Jade, there's a little buzz in one of their videos.
Is there? I'm not sure whose it is.
I think it might be Top G. But Jordan, what I was gonna say, yeah, you just want to make sure that you don't make, and this is for everyone too. You want to make sure that you don't make that one decision, whether it's over leveraging or over trading, which will cause you months and months of trying all over again. So it's very important to make sure that you always assess what is the worst case scenario, and when you do get to that position, you stop whatever you're doing.
So Jordan, I have a question for you. What would you say is the number one thing that's holding you back?
Man, the biggest thing would be definitely learning to accept losses more. And when that losing streak comes, because what happened with me is when my 100K, like I'll go on like a winning streak, and then after that I'll have like a bit of a losing streak, and it's just making it through that that tough time, that losing streak time within my strategy. That's like the biggest thing.
Yeah, I mean, I struggle with that too, because once you're in that losing streak, right, you can start making poor decisions, and now your drawdown, the steepness of your drawdown, like gets really, I guess it gets accelerated on the way down. So like trying to crawl back out of that and make money again it takes a while, right? Like it takes some mental fortitude and just being comfortable in that position where you're not making any money.
Yeah, definitely.
So should we get one of the other guests?
Yeah. So who wants to speak? Top G, icon of success.
Top G, where you from?
Top G in the building. His mic's muted right now.
Oh, go ahead.
Here we go. Top G.
Yo,
we can't hear you.
First off, it's a pleasure.
There we go.
It's a pleasure being on the panel right now. You guys are amazing. This is beautiful. Y'all putting this together, actually.
Thank you, man.
First off, I'm George. Okay, I'm hearing your feedback now. My bad. I'm from New York.
New York, baby.
So I'm here to ask you a question, or you guys are asking me a question right now.
You can ask us questions if you want.
But so I actually asked you guys in the channel at this point of your careers, how do you guys journal? Like, how did your journaling change throughout the years? Right now, that's been my main focus. My opportunity would be my greed right now, but I feel like journaling has like helped me psychologically, like just like even I haven't written it down. I'm not writing my notes. I'm not writing opening prices, etc. I want to get there, but I'm using my private Discord. It's just myself in there, and I'm throwing screenshots.
That's
And
a great way
I'm
of doing
talking to
it.
myself. Actually, yeah. So yeah, you guys can share.
Yeah, I wanted to ask George, like, do you record yourself? Like,
Yeah.
do you do like OBS? I mean, some of the best journaling, I
No,
think.
I haven't. I haven't
Just,
gotten.
and let me ask you this, out of curiosity, do you consider yourself like a performer? Like, or like an athlete might get on stage, or like an artist might get on stage? Do you like to perform?
Yeah, I was definitely in the manga. I'm sorry. I'm definitely been in the drama club a few times in school, and I was a baseball player growing up. So when Rodrigo
Okay,
was talking about in the different yeah, my bad. Go ahead. My bad.
No. I just wanted to build on that, and like, as you're trading, really look at your trading and as a performance. And if you can record it, you're performing for your recording, for your audience, which is going to be you, right? And then if it's you, and realistically, the world we live in today, it should be a hive, right? Just like we're a group of traders right now. You want to hold yourself accountable. And how you do that in the world we live in today, the chat GBT motherfucking world that we live in today, is you hit that OBS button, you hit that screen record, and you perform. And when you're doing a trade, you're performing your technical analysis, right? And that's a performing art that you're doing. Then you practice, bro. Then you practice, then you journal, then you back test, then you collect data, then you measure bars. You want to know what bars are? Back testing in 2023, that's called data. That's counting motherfucking candles. And if you aren't counting candles from a PD array, from a fair value gap, the way ICT teaches it, or from a fixed clock, right? I mean, you hear about the 5 o'clock a.m. price to the 9 a.m. price, or the 4:30 a.m. price to the 10:30 a.m. price. If you utilize a time cycle in a Fibonacci sequence, you're going to be able to slap a fib on a time cycle. That is ICT trading, right? Well, I say that to say you should perform. Will your log, your back testing, your performance. And you want to look at this as practice, just like an athlete practices 90% of his life. You're practicing in demo, you're analyzing, you're ensuring that your technical analysis is correct, because this is a science. And when you're in demo, you're in a lab, and you have a master's degree in finance, and this is a technical science. So just like biology, just like anatomy, just like chemistry, just like physics, you have a laboratory in which you're actually applying your analysis, your science, your model, your data.
So I'll just chime in too. I think
Yeah, pretty please.
recording all your information in Discord is a really good thing to do, like recording all your trades and stuff. But for me, like the journaling process is like tedious, right? So at times it's like extremely boring. For me, I liked journaling my emotions more so than my actual trades. Like the statistics, if you have an edge, right, they shouldn't change over time. I mean, that's part of back testing and everything. If you already have a back tested system, now you should start journaling your emotions more so, because when you look back and figure out like why did I become angry, or why did I become greedy or fearful over a trade, is probably more important than just relying on your statistics. Because if you're just relying on the statistics, you're not really you don't really are you're not being aware of your emotions, how you're feeling in specific trades, right? Like if you can have all the statistics in the world, right? If you take a loss on the day and now you get angry and you're following it up with another trade, right? It's more important to journal your emotion about that than it is to journal the actual trade itself, because you honestly shouldn't be in another trade if that was your model to only take one position a day. So for me, like my journaling process has evolved, um, kind of moving away so much from the data and all the entries and exits, like you were mentioning, and more along the lines of, um, do I have mental clarity? Like, am I in a flow state to trade properly during that specific day?
Wow, that's interesting. I might add that too, like my emotions during that day. But same, likewise, for me, when I first started trading, my journal was how many pips, TP hit, what pair. It was like a bunch of different columns. Now for me, it's like, did I win or did I lose? What's my accuracy? Now it's like, how long is my losing streak? How long is my winning streak? And with having this data, how it helps me is because I'm able to see that in my losing streaks, I eventually do get out of them, and I eventually do end up back profitable. So having a journal is really good to give you that confidence when you're not having the best trading week or the best trading month, because in this industry, you're not going to be profitable every month. Every month, there's not going to be great conditions. So you need to understand there's going to be some weeks where price action is super clean and some weeks where price action is not. And when price action is not, I get to look back at my journal and see, okay, I'll be fine. Price action will pick up again. There'll be trades in the future. Just got to stay patient and wait for those A plus setups and the better market conditions.
And I actually wanted to ask G a question, right? Like in terms of journaling, right? Are you referring more to like the technical side of things? Like, do you have like a specific strategy that you're using right now, or it's like you're trying to kind of still figure that out, or?
So right now I'm not focusing model. I'm focusing on my time to be at the charts for the most part. So basically what I do is I basically just jot down what PD arrays was used for the price action for that morning. I like that's kind of like my index cards for for lack of better words. It's kind of like, okay, this is what I saw this time at this time, et cetera, et cetera. That's kind of what my journaling is. Of course, win or loss, percentage, what I could do better next time, things like that. That's what my journaling is.
No, that's good. I mean, it's
Yeah.
good that you're not trying to focus on too many things right now. I think if you're just trying to focus on the time, the kill zones itself, right? If you just do that for 3 6 months at a time, then you'll collect more data than, I guess, deviating from doing that. Right? Like if you start, I guess, journaling your emotions when you really just want to start journaling your kill zones, like now you're adding too much to your journaling process, and maybe it's too much to analyze.
Yeah, and I think that's a great way to go about it. That's kind of how I did it as well. Especially like because it's hard, like because everyone's at a different stage, right? Because like for a beginner, how are you gonna tell a beginner to journal, right? When they don't really know what they're journaling, right?
Yeah,
For
yeah.
someone who has like an idea of like, all right, I already know what I'm looking for, right? Now, the way I personally journaled before, right? Once I learned like a bunch of ICT concepts, once I learned a lot about market structure, and I felt like my in terms of a knowledge standpoint, I was like okay with it, right? It's like all right, now I'm kind of like always journaling the day. So even if I didn't trade for that day or whatever, if I got a loss, whatever happened, right, I'm still journaling the majors. So euro, GU, dollar CAD sometimes, and I'll just always like know, okay, I trade primarily New York session because London is like in the middle of the night, and I'm not trying to wake up for that. But I'll always journal the New York session, even the London session as well, just to have like a little bit more understanding. Like, hey, what time did price react at this PD array, right? What was the daily time frame looking at the time that the daily candle was forming? Where were we relative to like I use the 4 hour time frame. So depending on whatever your criteria is for a trade, right? Was liquidity swept on this day, right? Which liquidity pool was swept? Being very detailed in that, you're going to see very common reoccurrences. Like for me, I have two models in New York session that I like to trade. It's either going to be a continuation or it's going to be a reversal profile. And I have my requirements for that. So now even to this day, I'll still journal the day. Like, hey, if I think was it Tuesday? Let me pull it up. I think it was Tuesday where there was a nice reversal setup on EU. And It's like, hey, what liquidity pools did it take? Took out prior day highs and it took out Asian session high. It might have been Monday, but yeah. The point
Yeah, a
is,
lot of times it's all repetitive though, right? Like every week,
exactly,
I'm trying to find the same setups, right? Maybe it's a
exactly,
Thursday, maybe it's a Thursday reversal profile, maybe it's the Tuesday or Wednesday or Monday high or low of the week, right? Waiting for a liquidity pool to be swept, and then I'm entering on a fair value gap. It's like literally the same
exactly. Same thing.
process for me every week. It eventually it becomes boring, right? And that's why I mentioned maybe it's. I can think once you get to a certain point where you already have the statistics, it's more important to journal your emotions and I guess how you're feeling on that specific day. Because I know for me personally, if I'm feeling like under the weather, if I don't feel like doing certain things, or I don't feel like looking at the markets, it's best if I just don't even turn my computer on and do something else with my day. So I guess we'll try and hear from some other people. We got Edo. Is it Edo or Edward? I don't want to butcher your name, man. I don't think we could hear you right now. You might have to change your mic settings. Nope. Is anybody else on here? We got no, I think that's it. No luck, buddy. Can't hear you. So I think there was somebody that kept trying to join. His name was GLS, but he kept having connectivity issues. So, I mean, if you guys don't have anything else, I think gonna try and wrap this up. You know, we'll close out with an outro. Do you guys have any thoughts on Funded Fridays? This is like our inaugural episode of Funded Fridays, where we just talk about funding prop firms, the future prop firms, kind of helping listeners how to pass a prop firm.
Yeah, I mean, honestly, I think the oh well, I mean, first of all, Kyle, thanks again for having us on, man, because this is actually a really dope concept,
Yeah, no
and
problem.
the production quality is definitely up there. So, I mean, first of all, thanks and like, congrats on having like this really good platform, man. Like, you guys are doing really well with this. Um, and just to kind of like, yeah, just like my final thoughts, I think when it comes to the prop firm space, right? Like, my number one thing is always going to go back to like, kind of avoiding social media while you're trying to achieve a specific goal, man. Because, if you're trying to get funded, and let's just say, and this has happened to me in the past as well, where you're going one week, you're on point, you're in flow, and then what happens is maybe the second week, right? Maybe you're up 3% on a challenge or whatever, 4%. And then what happens is you might see someone who's posting this big payout, and then it makes you, instead of like focusing on the long-term process of like, you want to start to have that instant gratification, you start to rush things, and then now it's like that second week you just go completely on tilt just because of that minor thing. So I think it's very important to, like, while you're trying to achieve funding, I think it's very important to like just cut out distractions. And I know like like a lot of people want to document their journey online, but I think I don't think that should. I think it's just better to, like, sure, document certain things, but you don't have to tell the world whenever you're starting a challenge, right? Don't put that additional pressure on. I see a lot of
I'm
young.
doing it right now, bro.
Well, that is different. Like, if you're experienced and you got like again,
Yeah, yeah.
Kyle's experience, he's been doing this for so long, and he has the confidence to do so, right? But for someone who's like maybe a lot younger, someone who's kind of like first getting into it, man, it's like, I understand, like, wanting to document it, but I feel like you should document it down the line when you already have the confidence in yourself and you already know that, hey, I've done this multiple times. Like, this is, I don't feel the quote unquote pressure. So
Yeah.
that's really my thing. Figure out like what, in terms of funding, like what mental roadblocks stop you from, like, actually achieving it. If it's your skill set, then that's something to work on, right? If it's your mental, what is it? And then, yeah, just be honest with yourself, because at the end of the day, lying to yourself that you're better than you are is just not going to help you for improvement.
Yeah, like kind of isolate yourself. Don't fall into any like Twitter beef.
Yeah.
There's a lot of people beefing on Twitter, like I'm the better trader, blah blah blah. It doesn't do anything for your trading. Trust me. Like you could literally spend all day on there trying to beef with somebody that you have no idea who it is, right? And you're just like you're just raging online, and it doesn't improve. It doesn't have anything to do with your trading, right? So I think Ito's back in. JD just hopped on. JD, you got your mic up, or can Ito? Are you Can we hear you now or no? Nope.
Oh, damn.
Can't hear you, buddy.
You can type the question, Eduardo. If you got a question, type it in the private chat. Or
Yeah, if you guys are guest speakers in here, there's like a little gear icon. You gotta adjust your mic. Make sure your mic's working. I think Jordan had another question. If you don't mind, Jordan, you can unmute your mic.
Everyone here, if you guys can just like emphasize how important patience is just on your journey, like with trading, and how it really helped you, because I feel like in the society we live in, you know, like Omar said, social media society, it's just everything so fast paced. You want instant gratification. And especially I know for me, like I've been in the market since 2020, and it's just been just patience, you know, for me. So if everyone can just like emphasize that for the viewers and also for myself, just to see how important it is.
Yeah, so for me, if you guys don't know anything about me, a lot of like, so my username is actually JadeCap, but that was because I was Chinese. But ICT did bring up a really good story about the Jade Master, where it's basically a story about somebody that kind of just started out on a journey of trying to learn a specific skill, and you know he kept doing all these menial tasks, and he didn't really see the point of them. But over time, like the accumulation of time and submitting to that process of just doing those menial tasks, at some point he was able to become a master at it. So like for me, trading is very much like that. And even in my career, it was very much like that, where like you want to get, I guess, a new job or new title, and you want to be a professional trader like right away, but that's really not the case. Like when I entered the job market, I didn't have any skills. So me doing all these small tasks and stuff, if I had a bigger picture in mind of where I wanted to get to, like that was going to require patience. Like you can't just go from, I guess, you know, a newbie, you know, somebody that's just like an undergrad that goes into the career, I guess the job market, and now all of a sudden you're a senior manager, right? So like that process takes time, and trading is no different. So like I guess having patience in trading is a very hard thing to do, because the access to markets is so readily available. Like you could literally go sign up for a 200K account tomorrow and think you're going to be able to manage that amount of capital properly. You possibly could, but it's a really long journey, and you have to just embrace all the ups and downs of it, because you know my journey, it's been a roller coaster up and down, and it's now just like the last couple of years where it's kind of like smoothed out, and it's not as, I guess, volatile as it once was.
Yeah, just to add on, like we can't tell you, yeah, be patient, and then all of a sudden you're patient. For me, like same thing with greed. Greed is one of the number one killer in this industry. I can't tell someone you gotta stop being greedy, you gotta stop over leveraging. Instead, from my experience, what I did was I couldn't cancel out the greed. Rather, I managed my greed. I channeled my greed to somewhere else. So if I had a funded account and I see the cleanest setup, and I think there's a 99% chance of it hitting TP, I wouldn't over leverage on my funded account. Rather, I would just place that greed on the challenge. And I'm just giving from my experience how I would channel my greed. Same with patience. When I was a full-time broke day trader, if someone would tell me you gotta be patient, it's hard for me to be patient when I rely on this, for my source of income to pay my next month bill. So instead, I got a job. I had a big safety net. I didn't have to rely on just trading by itself. So I was able to be patient with trading. So you just got to find a way to channel these negative characteristics, impatience, greed. Yeah,
Yeah, you
just
got to
those
kind of
two are
put
the biggest
yourself in a
killers.
position where you're not trading out of desperation,
Mhm.
right? Because you can't be patient if you're down to your last $5, right? Because you gotta,
Exactly.
you know, you're gonna have to press it. Like that's part of being patient, is, I guess, putting yourself in a position to succeed.
Yeah, and just to kind of build on that last point that Kyle and Paladin were making, right? Like honestly, bro, like I remember because and I see so much like how old are you, Jordan? You look pretty young. If you don't mind me
22.
I'm 21.
21.
Okay, all right, perfect. Yeah, so like, dude, and I have a video about this actually
That's
coming
the
out
young
tomorrow
people.
about like, because I see so many young, because I'm 28, so I see so many people in their early 20s, man, where like they're so dedicated to trading, and that's good, right? Because you have all the time in the world. But I feel like the turning point for me was when I kind of focused a little bit more of making money outside of trading, and because like right now I run an insurance business, so like if I don't take a single trade this month, right, or next month, all my bills are paid, and I have extra money for savings because like the insurance business pays for everything. So everything in terms of trading, right? If I want to take a couple weeks off of trading because I don't feel like it,
Yeah, you have the flexibility of being patient.
exactly. So that's why I feel like it's important. Like they said, make sure that your environment, you put yourself in an environment where it's much easier to be patient, right? Because like Kyle said, like if you're down to your last $5, $10, like no human being can like just be, oh, I'm gonna be patient. Like no, like it's just very difficult. But again,
Yeah.
if you have 5 figures saved up in the bank with low expenses, you have six figures saved up with low expenses, right? You have monthly income coming in. Trust me, it's so much easier to be patient on a challenge or be patient on a trade because I can take 2 trades for the week, 1 trade for the week, and whatever the money that is, that's all supplemental. And again, like it's something that most people don't want to hear because they want to be this trader that makes all their money from trading. But trust me, man, it's if you hear some of these crypto guys that I've like listened to and like have friends with, a lot of them they had just like fuck you money and they just threw a bunch of cash at like any random coin and they made 6 figures, you know. But that's because they had the leverage of
Yeah.
having, hey, like I have an e-commerce business, I have this type of business, like all this money that's I'm making from crypto, and mind you, they're not even like real traders, but they just made a
Yeah.
shit ton of money.
Scared money don't make money. That's like that's
Exactly, no, for real though.
Be patient.
JD, I think you've been waiting, man. Let's unmute your mic. What's going on, brother?
Yo, what's up? Can you hear me?
Yeah, we can hear you.
All right, cool.
Where you
Oh,
from?
me, I'm from Illinois, Chicago. So I
Nice.
know the city.
Interesting.
So
Chirac.
Chirac. But yeah, for me, my backstory is that back in 2021, I actually made a 5 figure payout. I was actually consistent with FTMO and the funded trader. But then slowly I started, kind of messing up my mindset. Uh, Started learning about my emotions. I started being that I'm a very aggressive type of person, very, I like to put on risk, put it that way. I like to put on risk. I like to get over trade, over leverage. And last year, I did make some money, but this year it's been very, very difficult for me, especially with the markets going on right now with the conditions. Like I said, a very aggressive person. I like to put on the risk and all that stuff, but I've been battling with being patient and disciplined, lowering my risk. As my personality is, very aggressive. I like to, like I said, I like to put on risk. I don't mind that. But it's knowing when to say, okay, fuck it. I'm not gonna trade today. I'm gonna take the week off or the month off because it's shitty ass price action. So my question is, how were you guys capable of, what got you from, because at one point you were impulsive. At one point you were over trading, being impatient. What I know for a fact it wasn't overnight, but what exactly were the steps that you guys did in order for you to, say, break out of the cycle, losing cycle, the mentality, all that stuff? Because my background is me coming from making consistent payouts, 5 figure payouts. And, like I said, this year has been real shitty for me, but, I'm trying to have a good mindset. I know what I need to work on, all that stuff, but it is hard,
Could I just jump in there 2 seconds?
Yeah.
I think the more you treat your trading journey as academia, I think you'll find that you will develop as a trader more. So really focus on when you are training and practicing and demo as an opportunity for you to really forward test your own analysis and science. I think it's important that you allow yourself that journey.
I think not only that, you wanna forward test like how you're reacting to certain things.
Yeah,
Like
exactly.
you really want to take note of your emotions. If you are like an aggressive trader, like I'm definitely impulsive too. Like I'll go out and I mean this whole podcast production has been impulsive by me. The last 2 weeks, literally, I've been not sleeping. So like if it doesn't work out, like that's me impulsively wasting my time. But I'm very much aware that I am impulsive, and it's like a constant struggle of me battling that impulsiveness and still putting on risk, because if I don't keep it in check at all times, right? That inner demon is like always waiting for
Yeah,
me to like take that misstep. So
yeah,
it is hard, like it just comes with time. And like what Kit was saying, like really treat it as like academia, where if you're gonna place a trade, it should be a learning lesson.
yeah. I
Yeah, and
do set parameters for my risk management. Like daily risk. 1%. Before I trade. Like I said, I've been making consistent money before, but it's just it's been shitty as markets and it's been fucking up with my mindset.
Yeah.
And just gotta dial it back, I guess. And man up.
yeah,
Yeah, and I think not only that, just don't I guess try not to put too much focus and emphasis on the markets. Like you do have to have a life outside of the charts, and you want to live like a balanced lifestyle. You don't want to just be glued to the screens because it's an easy way to burn out for sure, especially when the market's not going your way.
So JD, this is what I do when I work with traders. So my first couple of sessions where we're identifying all of the strengths and weaknesses. So we make a list and we focus on C game first. So we focus on your leaks, right? So let's say you've got your top 3 things that are really holding you back. Now, what we do is we go through a 5-step process. We identify, well, we describe what the problem is in detail. And then once you know that, you understand why does it make sense you have this problem, and why is it that you have this problem in the first place. And then the third question is, well, what is the flaw in this logic, right? And then once you find out what that flaw is, you can go a little bit deeper and start finding what the correction is. What should you be doing instead? What is that solution? And then once you identify whatever that solution is, then in step 5, you what is the logic behind that solution, right? So this method is a powerful method, and so shout out to Jared Tedler for this particular method. But it's a very, very powerful way of just focusing on one problem at a time, and just finding out what the trigger is, what the root cause is, what kind of emotions are brought up for that particular problem, why it makes sense you have that problem, what's the logic behind it, and what's flawed with that logic, and then what's the correction. And then once you know that correction, implement it into whatever part of the process is. So it could be your pre-market analysis, your trade management, or it could be the post-trade. Wherever that leak is, find the solution, implement it. And then this is the key. Then the key is to hold yourself accountable and get yourself a trading buddy and get them to hold you accountable for that particular correction, and then focus in on that. So that's essentially the work. What I do with traders when they have a particular issue is that's the process. So so hopefully you guys can take note and take some value from that.
Yeah, just to answer the original, that was really good. And especially the part about accountability. I remember our last call, that was one key thing I got from you, Rodrigo. So thanks for that. But just to answer the original question about impulsiveness, how to avoid that. For me, what I believe is that self-mastery is crucial in order to avoid that impulsiveness, in order to minimize that impulsiveness. If I was a person who woke up whenever I wanted to, who would just trade a couple hours in the morning and then smoke weed after, watch TV in the evening, and then wait for London session to trade again, that's not really self-mastery. I'll have a moment where my brain is doing whatever it wants to do at that moment. I don't have no discipline. I'm just doing whatever I feel comfortable. I'm just living my life based off my feelings. So when that impulsiveness comes in the charts, in the markets, I'll be impulsive. And like I mentioned previously, all it takes is one decision to bring you back all the way back to scratch, and then it'll even prolong your journey to be profitable. So self-mastery is important. You need to have a routine. You need to be able to follow the routine. You need to be able to have a goal as well and accomplish that goal, just so you can prove to yourself that you set a goal and you did it. You're a man of your word. If you can master yourself, it will definitely minimize your impulsiveness. It will definitely minimize the greediness, the impatience, all the bad things that we traders want to avoid to be profitable. So self-mastery is crucial.
Yeah, so like just for me to bring this up, like Paladin, I kind of wanted to kind of do a segment with you at some point on like marathon training, because I just ran a half marathon, and for me, like having that training regimen and like putting myself through that process of sticking to certain runs on certain days, like resting on certain days, helped my discipline. So like what do you find, like what are the value adds from your marathon training, and like why should traders maybe look into doing something that's extremely challenging? Maybe it's an endurance race, maybe it's something else. Like what do you take from that? Maybe it's like a 16-week training schedule where you're just lifting weights for 16 weeks. Like what is your takeaway from, I guess, following a process like that, and like what are the benefits of it?
Yeah, for sure. So the reason why I got into running back in 2020 was I had a torn wrist ligament, so I can't really lift. I do plan on lifting next year when my wrist is much better. So then I set out to do a marathon. I set out a goal because I was just at home, and this was during the time when I was a full-time broke day trader, when I was at my lowest point, and I just wanted to improve myself so badly. I wanted to be successful so badly. So I told myself, without even being able to do a mile, I struggle with a mile, I'm gonna do a marathon. Actually, I told myself I'm gonna do an Ironman, but let's just go with marathon for now. And then what ended up happening was the day-to-day action of just going to the gym 5 times a week, running that 5 miles. The discipline built from that is what made me the person I am today. I went from being so undisciplined. The person who I am today, if you compare me back to when I started my training journey, is nowhere alike. When I first started, I was so unorganized. I was undisciplined. I was just any other regular New Yorker, just rowdy and just crazy. But once I got into this training journey, once I knew about you need to improve yourself, you need to have a goal. And as I was working to my marathon goal, I started to gain that discipline because I would go to the gym when I didn't feel like. You think I wake up and then think, okay, I'm about to go run 5 miles today. I really enjoy this. No, there's gonna be some times where you don't enjoy this, and sometimes where, okay, yeah, it was a good running session today. But for 12
Honestly,
months,
after that run, you're gonna feel way better just getting it out of the way, right? Because you stayed disciplined to that process.
exactly. And especially the feeling after the first race you ever done of, and when I set out this Ironman goal, in my mind, I told myself, this is freaking impossible. This is impossible. If I actually do it, it's gonna be so crazy. And I spent the next 13 months training for that because I was in this journey for so long that I was at a point where I was just thinking, oh my God, I've read so many self-development books. I've been in this journey for 2 years and I've devoted everything. I dropped out of college, and yet I'm a nobody. I'm still broke. I'm still lonely. I'm still way below everyone else. So then I was like, screw it. I'm gonna be great for once. I'm gonna have my first accomplishment, which is the Ironman. And after that Ironman was done, it was just not only being an Ironman, but just the fact that the skills and the traits required to become an Ironman, it built me into a great trader. It all transferred into trading. If I didn't do that marathon, if I didn't do that Ironman, I don't think I will be able to have the discipline and the consistency that I have today to make me a great trader. So I highly recommend you guys set out if you guys want to get into running, maybe do a half marathon. You might think, oh, that's crazy. But as you progress, as you keep consistently going to the gym, you will be able to do it. And once you do it, you just prove to yourself that you can accomplish whatever you put your mind to. And not only that, that you are able to stay disciplined and consistent. It will all pay off in the end, even though it might not seem like it'll get you profitable, but it does correlate with each other.
Absolutely. So, what about you guys, Omar, Rodrigo? I know Omar trains MMA. He's getting ready for the prop firm fight night.
Nah, I mean, just to reiterate what everyone was saying, is just building some sort of like discipline or something outside of it, because it's weird. I actually saw there was this person I remember that was talking about how I don't know if you guys are like into feng shui and like how specific energy flow inside of the room.
You know me, I'm all about it, bro.
Yeah. But it's small things like that, like, dude, just making sure like because like the reality is this with trading, right? Like this is why also, like, similar to Kyle, I want to go the platform route in terms of a brick and mortar, because I like the idea of being in an office surrounded with people versus, like, getting up and then, like, my desk is here like in my house and I can just go lay down. Like, you're not in the proper professional mindset, because a lot of people, they'll be in they're trading from home, right? So sometimes they'll just wake up and just like open the charts up and they didn't do
Yeah,
anything
there's no
prior to.
accountability partner, right? You don't have anybody
Exactly.
holding you accountable. So I could easily sit on my desk and not go out for that long run that I need to. But yeah, I think trying to you got to hold yourself accountable really if you're especially if you're by yourself. If not, then find somebody that's
Exactly.
going to hold you accountable. For me, it was I leaned on Rodrigo a lot. Like
Yeah.
we had a lot of one-on-one calls. Like whenever I felt down or I was just stuck in a period of drawdown, I would always just contact Rodrigo. So yeah, reach out to somebody. Don't be afraid to reach out to somebody and get help from them, especially if it's a more experienced trader.
Yeah, exactly. And that's why I really like what Kyle's doing here too, because I feel like, with all the glitz and the glamour of like social media, especially a lot of like influencers who like posting cars and all luxury stuff, right? Like again, there's nothing wrong with it. Like I don't it doesn't bother me like someone's like, because again, if someone worked hard for it, by all means. But you guys also have to remember if they were just trading a lot, they wouldn't be able to afford those things just from trading. It's from other businesses and other income sources as well. So like don't look at these people that are like posting these big trades or whatever and then like buying luxury stuff, because it does impact each individual, especially for people who are younger, man. Because I've been through that. I've believed everything in the book, and then half the time, like it's all a facade. It's all for marketing, and that's just the reality of it. Like, are those people like profitable traders? Yeah, maybe, but they're not as profitable. Like, they're not able to afford all these things just from trading.
Yeah,
Which again,
and if you
there's
put
nothing
so
wrong
much
with it.
energy into thinking like, how is this person driving this Lambo? How is this person
Yeah,
doing this,
exactly.
doing that? You're not even studying trading anymore at that point.
Yeah,
You
and,
know?
and that's a great point that Kyle just made there, because it should all be focused on like, hey, what's the process of being a good trader, right? If you attach every like positive emotion, like let's just say you get stopped out, right? That's a negative emotional feel. But if you followed all your rules and then you tell yourself, hey, no, this is part of the process. I should be happy that that I got stopped out because I followed my rules. I didn't over risk. I didn't move my stop loss, and I had my trade plan, right? Then what you're doing is you're attaching like that feeling of like satisfaction, so to speak, to that incident. So again, so next time you get stopped out but you followed your rules, it doesn't hurt as much. Now I'm not saying you're going to be oblivious to be upset, because like it's not fun to lose money, especially if you lose 2 or 3 trades in a row. But if you understand, hey, I followed my plan, so I can be happy about that. Right now, you're slowly starting to associate these feelings with the not outcome based, but like the process driven. And if you guys go like listen to like so many different YouTubers in terms of like psychology podcasts, it doesn't have to be trading related. The number one thing they always say is like like you have to attach the process oriented approach. So like journaling, making sure to follow the process every single day, making sure to follow the trading plan every single day, versus like always focusing on the outcome. Because imagine trying to focus on the outcome of a game that's 100% based on probability.
Yeah,
You're
you
just
kind of have to flip it on its head. Like,
exactly.
if you take a loss on the day, you should. If you followed your process, right, that is a good day.
Exactly.
That's a great day. Even if you took a loss, like that's how you flip. I guess the emotional switch from you just following that process. Now it's a positive day, even though you took a loss. You followed your process, and that's how you're going to build confidence in what you're doing.
Yeah, and it's consistency too, because you can't do it one day like and then think, okay, now I'm never gonna feel emotional
Yeah,
pain.
yeah.
Like that's not how it works.
I'm gonna start sleeping in. I'm gonna do cheat meals every day. It's not like that.
Yeah.
What about you, Rodrigo? What are some things that you have done, I guess, to sharpen your discipline?
So I think I just want to echo what everyone's saying, because when it comes to sharpening the discipline, it really comes down to your identity, right? I noticed that the most successful traders, and even in myself, that once you have an identity, a vision of, or essentially you're starting with the end in mind. Like think about, let's say, just pretend you're at your funeral. What do you want people to say about you, right? What kind of mark did you leave on this world? And then once you've identified that identity, you want to create a vision as to what you want to achieve and leave behind. And identity is so important, because identity is what you're going to default to. And so once that identity is going to be built upon certain beliefs. And so if you want to be healthy, then you need to be consistent with healthy practices. If you want to be a profitable trader, a successful trader, then you need to be consistent with the practices of a profitable trader. And it's all about having the right habits, routines that you can compound. That this is the power of the compound effect. It's not just in investing, it's also in your habits, in your routines, because you can come. When was the last time, if those who are struggling with trading, when was the last time you were consistent with a particular practice that was new to you, right? Whether it be the gym, whether it be a particular a diet, whether it be trying to get rid of a particular habit, right? When was the last time that you were consistent and able to do it for over 20 days? So if you want, for me, and the work that I do, it's there's a method where I use a scorecard, right? And that scorecard is very, very important, very powerful, because as a trader, you grade yourself, and we come up with that grade, like as in we come up with the criteria of what the grades are, and then you score yourself based on that grade. Now, you obviously want to get top marks every single day, and you got to tag me, so I'm holding you accountable to that. Now, what you're doing there is you are, instead of focusing on the P&L and the outcome, you're now gamifying the process. You're gamifying every process because you got to grade yourself, right? You want to score good. And that over time, it accumulates. And that compound effect of following the right processes is what is going to allow you to establish discipline. And when you go through these drawdown periods, you know that you can still trust your edge. You will still take that trade. You will place the right correct risk, and you know when to step away. And if you were to go into drawdown, that's completely normal. That's what we do as traders. It's part of our business to take losses. And so it's just, and so having that identity, gamifying the process, and having someone there accountable, these are the ingredients for discipline. Because when you look at the most disciplined individuals, those athletes out there, successful entrepreneurs, they've got a strong team around them.
No, absolutely. Yeah, on that note, I think I just want to thank everybody for attending Funded Fridays. This has been a great time. Paladin, Omar, we really appreciate you guys hopping on the stream.
No problem, man.
And
Anytime.
shout out to Kit. Honestly, Trader Roundup is his baby. This is his brand, and we're kind of just cogs in a big wheel, right? We want to turn this into something where it's a round table, right? We're all coming together. We're all providing value to the listeners. So, big shout out to them, to all you guys, right? Everybody that's listening in. Jordan, thanks for tuning in. JD, appreciate you guys. So I guess on that note, I got I'll ask a question to the audience. What Rodrigo mentioned. When was the last time you were consistent with a particular process? So I guess on that note, thanks again, guys. Really appreciate you.
Peace.
We'll see you guys next Friday.
Have a good one.
Have a good one, guys. Yeah,
See you next
appreciate us
Friday.
having us on, Kyle. Yeah.
Thank you guys.
Friday.
Enjoy your weekend.